Good morning, America. Thank you for watching Taxes Made Easy here on the smartmoneyculture.tv. Got an interesting show about retirement and taxes. Got some really good articles here that talk about what are some of the biggest pitfalls in preparing for and then going into retirement. So this is a different perspective, and comes more from a financial planning perspective. But again, I see people hurt by this all the time, whereas they get ready for retirement, they make some classic mistakes, end up with big tax bills, and then they can't afford their taxes in retirement. People think, look, we retire, we don't have to worry about taxes. Not so. Unfortunately, they stick around and can be much higher than people anticipate. So stick around, unique show, and we will be right back after this short break. Welcome back, everybody. Thank you for watching live or on rebroadcast here at smartmoneyculture.tv. And again, Hubert Johnson here with Guardian Tax Law. We've got a lot to cover, and the biggest news out there I'm not really going to cover. And that's the whole Trump conviction. It's all over the news. It's people are talking about it 24/7. I don't like to dive into these big topics when they first come out because everybody has an opinion. And that's all it is opinions. I have my opinions, but if they're not going to be helpful, again, why? I mean, all the talking heads are out there on both sides of the aisle going off, and this is kind of a wait-and-see approach. What's actually going to happen? How is it actually going to affect the elections? Is this a sham trial, or should Trump really be in prison? And is this election interference right in the middle of a presidential election? So the appeals courts are the next step. Will SCOTUS get involved? Will they throw all this out quickly? Who knows? But if it's a lot of conjecture and opinion, and unless it's going to help you or be informative, I don't think it's going to help. And I think people have talked about it. People have kind of dug their feet in one side or another. Oh, they did everything right, or they did everything wrong. It's one or the other. So I don't want to focus on it because I don't think it's really going to help. The courts are going to make their decisions. I do think there are going to be larger ramifications here, especially in New York. So people are going to vote with their feet. Business owners, the people that create jobs, are going to vote with their feet. So that's going to be the theme for today. There are consequences and to decisions like that. We're going to talk about some larger tax issues here and how they affect the individuals. But what I really want to focus on, the theme for today, is how to prepare for your own retirement and avoid a lot of the tax issues that hit people. So had some interesting takes, and we're going to go through some news today, but it's not going to be the focus. Even though, again, it's all over the news. It's all opinion and conjecture at this point. What do you think the appeals courts are going to do? How quickly? Again, we don't know until they actually do it. So, and depending on what Trump's attorneys do at this point. So jumping to the first article here. This is just a quick article from IRS. And again, another disaster relief article. This is for Massachusetts. Severe storms and flooding in two Massachusetts counties, Bristol and Worcester. So again, every time they do this, they have filing and payment relief. This time it kicks it out to July 31st, 2024. And that eventually get to where the deadlines will have already passed for the current year, and they'll move forward. Try to provide the relief that they can. But if you're in Bristol or Worcester counties, individuals and households as well as businesses, or if you have a business there, relief can be applied. So if you have questions, click on the tax relief and disaster situation page, get informed, and again, anytime we have an emergency like that, it can be devastating on local communities. Next article, this is from CNBC, and Oil Alliance OPEC extends collective crude production cuts into 2025. Of course, it is news, but it's no surprise. They're making a killing when it comes to oil. Oil is high, and to keep oil high, they want to limit production, limit supply. And as the biggest oil producer out there, we're limiting our supply too, so it plays right into their hands. And this just means that gas prices will continue to be high, pushing forward in the future. Now, one thing I saw, again, this is OPEC, as we know, is centered around the Middle East. OPEC Plus now includes not only Saudi Arabia, but Russia and other producing oil countries. So again, these are not all our allies and friends. Russia's oil is fueling the war in Ukraine. If we really want to be serious about stopping Russia and Ukraine, we would produce oil like crazy, flood the markets with plenty of supply, and that would crash Russia's economy and their military might in a very short amount of time. But of course, we're doing the opposite. So again, this is just expectation down the road. Expect gas prices to stay high until the United States decides to do something about it. Again, higher gas, higher prices fuel higher inflation throughout the entire economy. Energy is important in everything. Trucking, shipping, everything gets shipped. And what's one of the things that gets affected by that? Materials for homes. So this is from the Daily Caller, talking about how some of the latest prices, and there's been a few different suggestions, and they can put them into one article. This is definitely not a pro-Joe Biden piece, but it gets talking about home prices continuing to go up, even though we have high inflation. So one of the proposals to deal with this is subsidizing housing. Sounds good, right? So, and then the DCNF they refer to as the Daily Caller News Foundation. So it's this article or this news source. With the government subsidizing housing, so this sounds like a good thing where the government is out there providing more funds, more money to purchase homes. The problem is when you just throw money at an issue, it can make it worse. It distorts the market and just can lead to a lot of other issues. So, and that's one of the things they talk about. They distort market prices, discourage private investment, and result in misallocated resources. Basically, whenever the government gets involved, there are distortions of the market, bubbles that are created, can cause the price to just go up. So if you have the same supply of housing materials, and all of a sudden there's more money in it, it just makes it more expensive. You have the more dollars chasing the same amount of building materials. So if you just throw money at a problem without affecting underlying supply of the good, it can just cause more inflation. So that's why government spending is not always, one of the reasons that government spending is not, it usually makes things worse, not better. So it just drives up prices throughout the economy. What we should be focused on are encouraging more production, encouraging more supply of raw goods and materials, decreasing energy costs, which affect everybody. But we're doing the opposite under the current administration. So then he's saying, look, we're going to give a $5,000 annual tax to new credit for first-time home buyers. Very similar thing. We'll subsidize and give people more money or tax break. But what does that do? Does that create more homes magically? No. Does it increase the supply of goods to build more homes? No. It's just more money, more people in the market to purchase a home, but no more supply of goods, building materials, contractors available. Doesn't change the underlying things that lead to the creation of homes. So if you have more money and more buyers, that's increasing demand for homes without affecting the actual supply of homes. So again, perfect storm for increased prices, increased inflation in the home market. So, it talks about some of the mortgage prices going up, and then they ding them on, oh, they're saying they're gonna build 2 million new homes, but they said if the government produces 2 million homes, it just all you're doing is you would have that in the private sector construction, but if the government does it instead, you're going to have a lot of inefficiencies. But the same materials, labor, and equipment needed by home builders to build the same supply gets chewed up by the government or used up by the government rather than private companies doing the same and reaping the financial benefit. So it's not like they're not building because they don't want to build. It's because you only have so many construction companies, so much material, and you have to pay more and more for it the more that there's competition for that. So, and then we've talked about the appliances, eliminating gas, forcing people to buy more expensive appliances. The Biden administration estimates that it will be paid for in 20 to 30 years. Others say 90 years. They cite the 90 years here, but even 20, 30 years, that's an expensive investment. It takes 20 years to catch up to that cost. So overall, this article really hammers home about how a lot of what the government is doing, all it's doing is throwing more money at the issue, doesn't really solve anything, and in actuality makes things worse. So I do have another, I'm going to change gears a little bit. Instead of talking about ongoing inflation and how the government is not helping, this is an interesting case. It's Bitcoin billionaire Michael Saylor. So this guy is a billionaire, settles for $40 million. And so I want to talk about this. They go and they say, hey, they're alleging fraud, saying that you actually lived in Washington, D.C. for years. You had condos here. Your yachts were here in Washington, D.C. So they're claiming that he lived there, but didn't pay the taxes in D.C. because the taxes in D.C. are very high. So why is this guy just paying $40 million? It's a huge fee and walking away. So we're going to continue on this when we come back. We're coming up on another break in just a few seconds and talk about why and how that makes sense. So we'll be back in just a second. Welcome back, everybody, here at Taxes Made Easy. And we were just touching on the CNBC article about Mr. Michael Saylor, who, again, has amassed billions investing in Bitcoin. And, again, big spokesman for Bitcoin. But, again, he got in trouble with the Washington, D.C. Attorney General. And they're claiming he evaded $25 million and district taxes by claiming he was a resident of lower tax states. So again, more and more these localities are getting aggressive. They're going after people, and he probably, I don't know the facts. Again, we have some of the facts that DC alleged. We don't know we don't know all the information coming from the other side, but to he has a funny quote on here. He's gazing wistfully, and this is from his Facebook post. Gazing wistfully at my future home, he was trying to build a home in D.C. while I wait for James to crack the whip on the contractors and herd the cats and get it done. I wonder if Tony Stark would be so patient. So comparing himself to Tony Stark, kind of funny. But so you have this huge tax bill, $40 million in state taxes, and he just pays it and walks away. So a lot of this is he going to fight it? Is he going to hide what happened, or is he going to settle? And it looks like here he settled. And so, again, when people talk about, am I going to jail because I owe the IRS or I owe state taxes, the answer almost always is no. But that's if you don't hide facts. If they had you can claim, look, we had a legitimate dispute. I claim I was in these states for so long, and they get in. Maybe he didn't actually follow through. A lot of times people set up tax advice, and then they tell their clients, hey, this is what you need to do to avoid these issues, and then they forget, or they spend more time where they want to be instead of where their better tax residence is. And he ended up paying a price for it, and he paid it, settled with them, paid him enough money to make it go away. Classic example of avoiding more serious issues by settling with them and having the issue go away. And really, that's what they want. They want their money. So most cases do not end up in tax court. So this is we've got a couple articles here from Daily Caller and Fox talking about, again, the Trump tax cuts. Now, I've got a New York Times article talking about the other side of things. I'm going to go through this fairly quickly, but this leads directly into the topic for the day. So, he talks about the big 2025 tax cut. And this is taking a look at things, the forest from the trees. How is this really going to affect people? They expire December 31st, 2025, and either you're going to have two things. And I like how they portray this, because really there are two ways to look at this. And they call it the ever higher tax crowd, or are you going to keep the tax Trumps in place, the Trump tax cuts in place? So the way they explain this is if they're saying it's going to cost $4 trillion. It's going to cost $4 trillion if they get rid of the Trump tax cuts. Whereas in actuality, looking at current numbers, they're claiming that the U.S. government would have $4 trillion more if they just tax the rich more. Because again, on both, to be fair, the left is right that it overwhelmingly benefits the rich. But it also benefits the middle class. So lower taxes for everybody, and it's just hard to reduce taxes for the middle class because they pay a lot less in taxes, percentage-wise, or how they look at it. So this is instead of looking at class warfare and the rich should pay their fair share, blah blah blah, when they're paying plenty in taxes already. What's going to truly benefit the country? All of us. And that's what we should be looking at. So, and that's really the gist of this article. And just kind of, they put up an example. Congress enacts a run-of-the-mill tax hike. It's a bump in the top income tax rate. The highest income taxpayers would have less income, and the government would have higher aggregate tax receipts, total receipts. However, you get fewer economic incentives to work, save, and invest, which overall would slow the economy because it's just supply and demand. You tax something, you get less of it. And so then total future revenues would rise less than forecast. But revenues would still rise. It'd still go up because you're taxing at a higher rate. However, if you take the tax cuts, people are working more, paying more. If days expired, you have millions of Americans to pay more tax and have less income. Federal receipts would rise. So same issue. If you get rid of them, federal revenues would go up, but you would have less economic incentives to do that. But overall, the economy would be slower. But one of their biggest arguments is that you have to pay for or offset any tax increases with more tax increases. So again, the point is you need a tax somewhere, and you have to offset the cost of a tax cut, but they ignore the benefits, they ignore of a tax cut, they ignore that receipts have gone up dramatically after passing the TGCA. And the concern here is that we're being short-sighted. And instead of what the real spending issue is cutting taxes. So I don't want to beat this to death, but again, it's an interesting read. It takes a different perspective from it. And again, they cite Richard Rubin from the Wall Street Journal. But I do want to move on. And this is, again, the Fox News article, again, very pro-tax cut, Trump tax cuts. They're saying that Trump tax cuts save the average family $2,000 a year. True. Now, will taxes go up overall? Yes. But they talk about 5 things. So this is the biggest middle tax cut in history. Repealing it would increase taxes on those making less than $400,000. But there's so many hidden costs to the economy, mainly through inflation, increased government regulation, that hit your middle class. That's why people, even though you might see more dollars, the dollars are going away. You can't buy as much. It really is affecting people across the board. So, again, just getting harder to live. The Trump tax cut simplified the tax code. How? Main way is they doubled the standard deduction from $12,500 to $25,000. So people don't have to keep shoeboxes of receipts and track that. So 90% of Americans, almost all the middle and lower income families, just check the standard box of deduction, of the box for the standard deduction. It makes life a lot easier, and it saves them, doubles the standard deduction, so it saves them a lot more money. Getting rid of that will cause the lower and middle class families to pay more, just well. Your starting point is going to drop a lot lower, so overall you will pay more in taxes when these expire. And this is an interesting. So they got rid of, or they capped the deduction of state and local taxes. So is it fair that millionaires and billionaires in blue states pay less in federal taxes than those from other states? So really, is it a subsidy to higher tax states where other millionaires and billionaires living in other parts of the country are subsidizing the higher taxes in blue states? Now, people can claim, hey, that's not fair to the people living in blue states, but blue states make their choices. Passing the buck and the costs onto other states that don't have high taxes, I don't think that's fair. But that's my opinion. So blue states, of course, they want to get rid of this because it's hurting people. People are actually being forced to pay the full amount of taxes rather than get a federal tax break. And so it's millionaires and billionaires are voting more with their feet and leaving high tax states, which is why blue states definitely want to get rid of this cap on the deduction for taxes for high tax states. Again, the economy did expand. There were increased business activity, which is why we have higher than ever revenues. And did the rich pay more? So this is an interesting thing. So as a percentage of their income, the rich paid less. Absolutely, hands down. And that's one of the biggest attacking points from the left, is that the rich paid less as a percentage of their income. But their income did not stay static. So the pie, even though they're paying a smaller percentage, they grew that pie. So when you look at a percentage total of income taxes paid by the top 1%, and now these are cherry-picked numbers, it's not just the top 1%, but when you look at the richest, it went from 40% of federal revenues to 46% of total revenues in 2022. This was the largest share of taxes paid by the rich ever. So when you look at the percentage of total taxes paid, what the rich paid in was higher than ever. So are they paying their fair share when the top 1% is paying 46% of federal revenues? That's an argument to have. Again, what's fair is very open to interpretation. So again, but I'm going to jump to the New York article now and look at the other side of things, because they really do post what kind of country do you want. Start with taxes. So again, fixed pie here, fixed cake, where even if the rich's percentage of the pie shrinks, even though they might pay more overall in taxes, it's unfair. So these are classic arguments from the left. This is a funny first line, though. To many Americans, the 2024 election is about choosing between the felonious and the frail. So one of the two. And this is really talking about taxes. It's a basic public choice of public policy. So fairness, the rich get away with too much. That's really the mantra from the left. We need to tax the rich. The rich are already getting taxed. They're already getting hammered. And so this really goes, instead of talking about the facts here, he says, should the enormous, ineffective, inequality abetting tax cuts that he signed into law be extended past the scheduled expiration date? So here's the question. What is the point of taxing the rich? Is it to bring them down to everybody else's level to make sure that they don't make too much money? Is it to hurt their overall productivity? So is it about income redistribution where we just take from the rich and give to the poor? Or is it about increasing overall revenue so there's more available to help the poor? So if the rich make more money but pay more in taxes, how's that a bad thing? So that, in my mind, that's really the question here. And so here they say that it's a choice between two fundamentally different visions. If they get passed, it's going to leave lower tax bases in place. It'll benefit the rich, and worse, it'll exacerbate a fiscal crisis for programs like Social Security and Medicare. I don't agree with this at all, because the funds that actually go to Social Security and Medicare aren't going to change either way. So that is very misleading, and it's in trouble no matter which plan you go with. The increase in taxes are not going to go to Social Security and Medicare if they repeal the Trump tax cuts. So the biggest complaint is that corporations and the rich don't pay their fair share. Why don't they pay their fair share? Where is that? I mean, it's just, it continues to go into this as to why it's not fair. And I'm not going to spend too much time because I really want to go into some of these articles here that talk about retirement. Our goal is to help people clean up their tax mess, know how to best save on taxes, and we want you to have the same problems the rich do. We want you, we want the average person to have more investments, to have to worry about tax issues, and to be able to prepare for tax saving strategies moving forward. So increase the pie, increase the number of people that are making more money, and move up. So I ran into a couple really good articles here. First one from Yahoo Finance, and this really goes to what we're talking about. Beware the retirement savings time bomb. Now, this is, again, Yahoo Finance tends to lean left, but this is a really good article about taxes, and again, it's just the facts, it's just the numbers, and what people expect to happen. So this is Carrie Hanna, a senior columnist, wrote this, and again, it's not political. This is just how to help you in the future, and it gets in the weeds. But the whole idea is right now, when we have lower tax rates, that's when people should be paying more in taxes. Why? Because otherwise, you put all this money aside, and if it's not taxed now, you're going to have to pay more in taxes later. So really, the difference between IRAs and 401ks, they're tax deferred, not tax free, which means you're still going to get hit by the taxes when you go to retirement. And then Roth IRAs, where you're paying the taxes now. So here's a key thing. And she repeats this throughout the article. Always pay taxes at the lowest rates. Sounds like pretty simple common sense, but people mess this up all the time. So it's about her new book, A Ticking Time Bomb. People miss this critical point and often end up paying much more in taxes in retirement than when you'll need the money the most. So if you have a nice big savings and you're in retirement and you need to pay taxes on all of that, it can definitely hurt your retirement. And one of the biggest mistakes I see is when people take out large chunks. They don't save, they don't plan for larger expenditures. They have the money and they take big chunks out of it, and then all of a sudden they owe taxes that they can't afford to pay, and they've dug themselves a hole. So one of the things they talk about, and this is kind of interesting, the top federal tax rate from 46 through 1963 was 91%. So when you talk about the rich not paying their fair share, does it have to be 91%? Post-World War II, that's what it was. But it was full of holes. There was all kinds of loopholes. And did the rich play by the rules? Of course not, because the rate was 91 stinking percent. It was insane. So what did they do? They used every trick in the book to get around it. Wouldn't you too? Then in 64, it went down to 77%. We're coming up on another break, so we're going to continue this when we get back. But taking things and looking at a historical perspective can help. Welcome back, everybody. So sharing this article, this is the article I was just talking about. Again, you have the Retirement Savings Time Bomb. It's a book being put out by Ed Scott, and talking about, it's all about the taxes and saving, making sure you minimize your taxes. So what I was talking about before, going down a little bit louder, down Again, I want to make sure I'm sharing this. Traditional IRA and 401ks, taxes that are tax deferred, but you still have to pay the taxes on it. And that's what he's really talking about, not Roth IRAs and 401ks. Why not Roths? Because you've already paid money into them. When you put money into those, it's on post-tax money, so that's tax-free. And his point is that you always want to pay taxes on the lowest amount possible. So historically, again, 46 through 63 was a 91% tax rate. And if you're not one of the super rich and know how to maneuver around that, people were getting killed. It made no sense to be productive in the long term. 64 and through the Carter years, it was 77%. And he said he was only 10 years old then. The whole country did a happy dance. Was so happy with 77% tax rate. Now, top rate is only 37%. What is a fair tax rate? I mean, historically, 77%, is that fair or is that highway robbery? 91%? Especially once World War II is over, I think that's insane. During a global war, yes, you could argue for that, but otherwise it's just insane and very counterproductive. So his point is, look, while it's 37%, this is when you should liquidate. This is when you should pay the taxes, whatever taxes you can pay on money, at the lowest rate possible. And I see this happen all the time, where people, they think that their money, they're not going to be working, they're going to be retired. If inflation does not keep up, or inflation outpaces the cost of goods, you might need more money than ever just to survive. And I can't tell you how many people are still working, or people that still want to work in retirement. They have a job that they enjoy doing it, or they have enough income. If you have Social Security, if you have a pension, if you have multiple sources of income, which you should have, you definitely can be in a decent tax bracket. And when you sell or you pay taxes if you take big chunks of money out, the government's still going to take a huge bite. However, if you've already paid the taxes on it through a Roth IRA or Roth 401k, it's not going to hurt you nearly as much. So that's his whole point is, foundational principle of all good tax planning, again, always pay taxes at the lowest rates. People don't want to pay taxes before they have to, but you should be always thinking, what is the lowest rate? I want to take advantage of that. So while the rates are 37%, now is the time to move, start trimming those IRA balances, move them out of, and get them out at the lowest rates possible. So pay the taxes now at the lower rates, and then get them into tax-free territory in a Roth account or other tax-free investments. There are investments out there. What is the single greatest threat to retirement dreams? Future taxes. So one of his points here, and we're going to get into it, what's probably going to happen with taxes? They're probably going to have to go up. If President Biden increases that, if he gets rid of the tax cuts, the Trump tax cuts, taxes are going up across the board. It's just going to happen. People are going to be paying football, or they're going to be paying more taxes. So he has a quick analogy to football. He likes football. They say the first half of the game is investing. People are usually good. They sacrifice now. They put money away to savings, and they do that for most of their life. And he's saying, but the second half is where games are won. And if you know football, you know that can be very true. They think the game's over when they've saved. However, that's in the retirement phase where the IRS comes out to play, and that's when the IRS collects a lot of money and hurts people in retirement. So protecting that money is the other half of the equation here. So you want to invest and save in the first half, but also protect that money and plan for having as much tax-free money as possible in retirement. So you have your home, which is one of your largest assets, but you still have to live somewhere and moving somewhere. It's very, very expensive unless you move to Mexico. And I just talked to someone the other day, moved to Mexico. They were living on the beach on a pension, doing just fine for themselves. But then they had to come back to the United States for treatment or other things, etc. But and you can really blow it in the second half of the game through paying large amounts of taxes, excessive unnecessary taxes. And this is when people pull out large funds. They get smacked with hard taxes now, or they mess up a rollover rules. They don't not know the rollover rules and the distribution rules. I see it all the time. People end up with huge balances, don't want to cash out all their savings, and be left with close to nothing in retirement. So stock market is booming. Savers are happy. But let's see what happens moving forward. Here's the thing. It really is about taking that money as low as possible. So his argument is most people should stop contributing to traditional 401ks and IRAs. Again, move to Roth 401ks and Roth IRAs. But there's other options as well that he hints at. Again, this is a time to go talk to a financial planner. There are types of life insurance. I'm not sure if that's the best way to go, but there are other tax-free vehicles that grow and compound for you. So when you take the money out in retirement, you're not paying more in taxes. And one of the biggest points here is what's going to happen in the future. Are taxes likely to go up or down? With the way the economy is, they're probably going to go up, and substantially, unless we finally cut our spending. We are spending ourselves into oblivion and the expectation that taxes are going to go up. So anybody that has assets, anybody that is collecting a decent income, expect your taxes long term to go up. And that's another huge reason to pay taxes now as cheaply as possible. And if you're not in the 37% tax bracket, that's the highest bracket. Most people don't fall into that, but he's telling same thing. If you're in a lower tax bracket, pay it now before the Trump tax cuts expire. Whether you want them to expire or not, take advantage of those lower tax rates, and it will only help you moving forward. So best option when they retire to do an IRA rollover. There are other options, but make sure you do it with someone that knows what they're doing. I can't tell you how many times people take huge hits on IRA rollovers, and then you have the cash right there. Unless you're retired, we can't protect it. So if you take a minimum distribution this year, what should you do with it? Don't spend it, invest it. Unless you need it for living expenses, just turn around and invest. And they start talking RMD territory, required minimum distribution. So you get to the point where you have to take a minimum distribution, and it can't be converted to the IRA. Invest it. Get that IRA balanced out as low as possible for future taxes. If it just builds, you're going to have to pay more in taxes in the future. It talks about charitable giving, which is a separate topic here. I have one last article that I want to talk about. This is from Joshua Jeff, another financial advisor through Ameriprise Financial. Tax saving moves ahead of required minimum distributions. Same thing. Converting taxable assets to a Roth. If you expect to be in a higher tax bracket, move them to a Roth. Pay the lower taxes now. Selling investments that have appreciated. As long as you've held them beyond 1 year, it makes sense to sell appreciated long-term assets when your taxable income is lower. And then redeeming older saving bonds, exercising stock options, and then have a withdrawal strategy. Plan this out. Because too many people, they hit retirement, I need this, and then, I have money available, so-and-so needs this. I've had people tell me, look, they cashed out their 401k right before they were going to retire. Someone got sick, needed the money. Instead of planning things out and sticking to a plan, now they themselves are in a huge financial crunch, and need help and can't pay for their taxes. So plan, plan, plan. Talk to professionals. If you need those connections, reach out to us. And so that really is the message of today. It's a little counterintuitive, but paying taxes, it's not about how much, it's not about paying more now. It's about paying and setting up your financial strategy long term to best benefit you and your family. Because my goal and our goal here at Guardian Tax Law is that you have the rich people problems, that you have to worry about tax bills, and that you can plan for your future, not only to get out of taxes, but stay out of taxes and thrive despite what the economy and the government is doing. So again, if you have questions, give us a call, 520-485-7371. You can reach out to us. I would look up these articles, read through them, become more familiar with how to save for the future. And again, I try not to be a Debbie Downer, but moving forward, again, we're spending more than ever. The GDP to debt ratio is higher than ever. Expect taxes to go up. Social Security is going to take an 80% cut unless taxes go up. And the idea that we're just going to tax the rich and pay for it. Yeah, the line is we're just going to tax the rich. It usually doesn't happen that way. And when we tax the rich, that's fewer money, less money flowing through the economy. It goes to the government. And we know how wise the government is with our funds. Gotta laugh a little, but I do think this is very helpful advice out there. Talk to your tax professional, plan a withdrawal strategy, plan it out, and follow it. And it can absolutely help you save hundreds of thousands of dollars in the end and set you up for retirement. Nothing hurts me more than seeing people in retirement struggling by, can't rub two nickels together, and then they frequently end up dealing with the IRS, dealing with tax issues. Avoid it by planning now and planning for the future and to handle your retirement funds well going into retirement. So again, happy Monday, start of a new week. We want to kind of start things off with a bang. And, things are going to be interesting the next few years. But as long as you prepare for it, you and your family can thrive financially. And that's really what we're hoping to do. The more people we can help, the better off all of us are. And we're all in the same boat together as Americans. And, again, we love steering people in the right direction. So, again, our number is 520-485-7371. You can find these shows at thesmartmoneyculture.tv or through our YouTube channel. Go to our website at guardiantaxlaw.com. And there's a link directly to our YouTube channel where all these will be posted. And I hope you guys have a great start to the week. And let's plan not only to save your finance, not only help you save taxes now, but in the future as well. And let's get informed, people. So have a great day, and wish you all the best.